Have you seen the budget which is declared by our Finance Minister Nirmala Sitharaman? What we all know, 12 lakhs rupees is non-taxable, or there are many things. So let us discuss about the direct taxes proposal today, and we will see overview of the direct tax proposal only today, and then we will see in the next time about the indirect tax proposals. So let us discuss about the direct taxes proposals now. This budget mostly is laying down a roadmap for the growth, inclusion, and the fiscal prudence. So now key highlights are the fiscal discipline and the economic growth. So fiscal deficit is targeted has been lowered to 4.8% of GDP, and there is a strong emphasis on the capital expenditure, and there are four engines of the growth. One, agriculture; second, MSME; and third, investments. Fourth is exports. That will remain the central of our economy strategy. So, towards the agricultural and rural development, the PM Dhanya Krishi Yojana aims to boost the farm productivity. Then, Mission for Atmanirbhar Bharat and initiatives for the women entrepreneurs as well as the young farmers and MSME will advance the rural development. Then there are certain steps taken for the urban development also, like a new public-private partnership in logistics, transport, and energy security will enhance our infrastructure. And there is a continued efforts for towards affordable housing and the clean water supply in the Jal Jeevan mission are commendable in this particular budget report. So in the financial sector also, they have increased the FDI limit for the insurance sector, and they have modernizing the pension sector will enhance the financial security for the citizens. Towards the technology and innovation also, there are some reforms have been taken place, and the tax reforms, you all know that the raising the income tax rebate in the new limit to 12 lakhs will benefit millions of middle class taxpayers. Reducing the withholding taxes will enhance ease of doing businesses. And there are some extending the time of income tax return filing from 2 to 4 years for the voluntary disclosures. That is also a welcome change. And of course, the startup incentives have been extended for another 5 years to support the entrepreneurship, which is the startup entrepreneurship. There are certain changes in the international taxation and the transfer pricing, but we are not going for that now. So looking at this, the key sectors, the finance minister has seen that there will be a fund available at the disposal of the middle class people to spend more. Indirectly, there will be a consumption will be increasing. Money will go to the market, and there are people are saying that there is no capital enhancement or the capital project taken place, or the more funds is not given for the capital infrastructure. But finally, ultimately, the aim, in my view, the aim is to ask a private player to come forward and go for the investment along with government. So earlier, the government only was doing for the infrastructure projects and all. Now they are expecting that the private player also will invest in the capital market, not capital market, but the capex projects. So let us go through the budget's highlights, and then we will go for some technical aspect of the direct taxation. We are not taking any indirect taxation proposal today. So the first is fiscal deficit is at 4.8%, which is a revised estimate for the financial year 24-25, and it was budgeted for 4.4% for the financial year 25-26. There was some allocation towards the various projects, so we are not going into that. We are straight away going to the direct taxes proposals. The individual HUF, BOI, AOP, and artificial person tax slabs have been in the new regime changed to 0 to 4, 4 to 8, 8 to 12, 12 to 16, and 16 to 20, 20 to 24, and about 24 lakhs. So, threshold for rebate is increased from 7 lakhs to 12 lakhs rupees, ensuring that the tax-free sectors of individual earning up to 12 lakhs under the new regime, and those who are getting salary, it will become 12.75 lakhs. There was some addition of deduction under section 80 CCD 1B extended to contribution to NPS Vatsalya scheme of 50,000 per year for minors. So whenever a parent wants to invest for their children, this scheme is taken under 80cc D1B, where they can get the 50,000 deduction in the particular year if they want to invest. and the partial withdrawal up to 25% of the contribution for medical or education requirement shall be exempt. If they do a full withdrawal, then it will be taxed. As I mentioned earlier, that the tax holiday for the startup has been extended to incorporate on or before 1/4/2030. So 5 years are extended, and there were removal of higher TDS and TCS rates on non-filers of income tax is no more applicable. And there are various subsections of TDS where the threshold limits of applicability of TDS on interest, commission, rent, dividend, professional fees is increased. We will go one by one in detail also, but it is the major part of the TDS. Regarding the house property, they have earlier also there were two self-occupied, but we will have to give the reasons for the non-occupation. Now they said that annual value of up to two self-occupied house property to be considered as nil, even if the property remains vacant for any reason. So now a person can take the benefit of two self-occupied property, and it will not be termed as a deemed to be let out property. And under section 139(8)(a), the time limit was earlier was 24 months for the filing of updated returns. Now it is increased to 48 months with higher tax rates. And one very, it is not a welcoming change, but it is a change now made for the carry forward period of losses in case of the amalgamation. Earlier, amalgamation or the merger, what happens was the carry forward losses were getting new life of 8 years whenever the loss making company getting amalgamated to the profit making company. So now it is any amalgamation or any business restructuring or any reorganization, it is capped at 8 years now. But it is from the year in which the loss was first computed the original predecessor entity. So for example, company A is getting merged with the company B, and the losses of company A is already 4 years are elapsed. So now the company B can take the losses carry forward for another 4 years, but they cannot take up to 8 years. The free life, the additional life is not given now. Something about the arm's length price and the block period is there, but we are not going for that. Now, one change is for the non-resident. It is a welcome change, like purchasing. Sometimes the non-resident is purchasing goods in India and exclusively for export. So, he is a non-resident. He is in India, purchasing goods in India, and they are exporting the goods. So earlier it was disputable that whether he will be termed as a permanent establishment or not. So now they said that it will not be considered as having significant economic presence in India if they are purchasing goods only for the exports. This is also a welcome change, and there are two changes. One, the presumptive taxation regime for non-resident offering technology and services to India electronics manufacturing industry. So there is a non-resident offering the technology and services to India's electronics and manufacturing industry. So in that case, 25% of the gross receipt of such non-resident considered as a taxable income. So no books of account to be maintained, and straight away 25% will be taken as a gross receipts. There is one change in ULIP also, that unit-linked insurance policies not qualifying for exemption under section 1010D to be classified as capital assets. So those ULIPs which were not qualifying for the exemption 1010D now will be taken as the capital asset, and the gains arising from their redemption to be taxed under the capital gain as a equity oriented fund. Similarly, virtual digital assets now brought, including the cryptocurrencies, are now explicitly covered under the definition of undisclosed income for the block assessments. So they brought this cryptocurrencies also under the tax net. Time limit for imposing certain penalties have been revised to 6 months and all, and relief for non-payment of TCS and taxpayer deposit the TCS before the due date of the filing of the quarterly return. So prosecution and all, which is not the work of the income tax department. So they have now said that, okay, if you make the payment of TCS before the due date of the filing of the return, there won't be any prosecution for the delays. Period, the time limit for completion of the block assessment extended to 12 months from the end of the quarter in which the search is concluded. There are some changes for IFSC, then FPIs and ETFs and all. We are not going with that. Some tonnage tax also, there is a certain changes. One change which they have started for the trust. Earlier, what happened was there were many trusts. So people were, some trusts were working, some trust was closed. So last to last year in 2022, they said that all the trusts or the CSR companies to be re-registered again. So and for ATG and for the 12AA. So people have registered, and those who are not registered, the trust is not available. So now what they said is to the validity period of the ATG or 12AA or whatever the registration they have granted, whose income is not exceeding for 5 crore rupees. So each preceding 2 financial years, so there were 2 financial years to be covered. Each of the preceding 2 financial years, if it is not 5 crore, then the time limit is extended from 5 years to 10 years. So 10 years, they will not ask for any re-registration. In individual, there are old regime, there are no changes and no tax slab change and the basic rates. So in the old regime, if you look at no change of tax slabs and the basic rates, surcharge in case of long-term capital gain is continued and it is capped at 15%. In case of associate person and consisting of only companies and its members, surcharge shall not be exceed 15%. And there is no change in the education cess or the health cess, and no change in the tax rebate for resident individual whose income does not exceed 5 lakhs. So there are no changes per se in the old regime. For new regime, as I mentioned that the tax rate is in a particular slab. So the taxes is in the slab of up to 4 lakhs is 0, then 4 to 8 lakhs, then 8 to 12, and the percentages remain same, 12 to 16, 16 to 20, 20 to 24, and 24 and above. If you look at the new regime particularly, so it is continue to be a default tax regime. You can opt for the old regime. So there are no changes in surcharge. Tax rebate limit to a registered individual is increased from 7 lakhs to 12 lakhs, as I mentioned earlier. So 100% rebate is available. And no change in the standard deduction, that will remain at 75,000. For firm and LLP, the tax rate will be 30% and the surcharge will be 12% for income above 1 crore. And no changes in the health and education cess, and the tax effective rates shall be for AMT will be up to 1 crore. Effective tax rate for the firm and LLP will be 31.2%. Above 1 crore, it will be 34.94%. For companies, again, there are no changes in the normal regime, and the tax rate is 25% for domestic companies having the total turnover of not exceeding 400 crore in financial year 23-24, and 30% for the domestic companies having turnover of gross assets exceeding 400 crore in financial year 23-24. And no change in the foreign companies tax rate, which is same 35%, and the domestic companies surcharge is around surcharge is 7% if income exceeds 1 crore and 12% where the income exceeds 10 crore. For foreign companies, surcharge is 2% is applicable where the income is exceeding 1 crore and the 5% where the income is exceeding 10 crore. And no change in the health and education cess, which is at 4%. Next is if we look at the optional regime, then if you are into section 115BAA, your effective tax rate is 25.17, and if you are into 115BAB, your effective tax rate is 17.16%. When we look at MAT, the MAT is 15% now, and it was earlier also, so there is no change in the MAT, 15%, and AMT is 18.5%, which is excluding the cooperative societies, and AMT rate continues to be at 15% for the cooperative societies, and no change in the surcharge in the cess. When we look at capital gain for non-resident, it is proposed to amend the section 115AD to provide that the long-term capital gain tax on transfer of securities other than the units referred under section 115AB included in the total income to a non-resident shall be calculated at 12.5%. And there are some changes in the TDS and TCS threshold as well as the percentage. I'll just quickly run through. Dividend for an individual shareholder, the limit is increased from 5,000 to 10,000. Interest other than securities for Indian citizen, 50,000 to 1 lakh rupees. and for other cases 5,000 to 10,000 rupees. Then winning from lottery, crossword puzzles, etc. The aggregate amount earlier it was 10,000 rupees during the financial year. Now it is 10,000 rupees for say single transaction, both for winning from lotteries as well as the horse races. Insurance commission increased to 20,000 from 15,000, and income by way of commission, prize, etc., lottery prize, ticket, etc., from 15,000 to 20,000. Commission or brokerage, the threshold is increased from 15,000 to 20,000, and rent it is increased to 6 lakhs from 2 lakh 40,000. For professional or technical services, it is increased from 30,000 to 50,000 per transaction, and enhanced compensation under section 194LA. It is 5 lakhs from 2.5 lakhs. So straight away it got double. There are some changes in the TCS. LRS, any remittance under LRS and overseas tour program package, it was earlier it was 7 lakhs, now it is increased to 10 lakhs. And TCS on remittance under LRS for the purpose of education, financed by loan, etc. Earlier it was 0.5% after 7 lakhs. So now it is nil. So whatever amount earlier, if the amount goes beyond 7 lakhs, there was a TCS of 0.5%. Now it is nil. So basically, these changes are made so not to have so many refunds. The government has given a lot of refund because of TDS deducted. So now they have increased the limit, but the tax net is there. So people are still covered wherever the major component of the income is covered. So wherever there was minute income, small income was there, they have now seen that the formalities or the paperwork was increasing. So now they have said that let us increase the threshold so that the small taxpayer will be excluded. So there are some changes in TDS and TCS on sale of the goods whenever there is a overlap. So earlier 194Q was prevailing on section 206C1H. So now there was always a dispute. The seller was saying that I will deduct the tax, I will collect TCS under section 206C1H, and the payer always say that I am making the payment of 50 lakhs and more, so I will deduct 194Q. So the government has came out with the straight away solution which will be applicable from 1st April 2025, that obligation of the seller to collect TCS under section 206C1H is now removed. So only the buyer is responsible to deduct TDS under section 194Q. I repeat, earlier there was both the way, there was a taxation, TCS collected by the seller or TDS to be paid by the payment payee, and the always 194Q was overlapping, or whenever there is a tax to be collected or payment to be made, the prevailing of section 194Q. So now section 206C1H is removed. So only buyer will cut the TDS under section 194Q. So this is what the thing is. And one welcome change is what we are seeing from 1961, maybe 1990s, that there were two limits. One was any benefit or amenity granted free of cost or at concessional rate by employer to a specified employee. Now, specified employee, the definition was given as whose salary gross total income is exceeding 50,000 rupees. So that will be taken as a perquisite. And the second was the expenditure incurred by the employer for travel outside India on a medical ground of the employee or family member is treated as perquisites in case of employee whose gross total income exceeds 2 lakhs. Now, these two limits are very old. So they want to adjust this limit with the current standard of living and the economic conditions. So it is proposed to increase the limit to be prescribed in the income tax rules. So when the budget will be cleared from the parliament, it will be coming into our rules. One welcome change, as I mentioned earlier, income from house property, annual value of self-occupied property, simplified. Currently, annual value of up to 2 houses taken as nil, where the owner occupies the house for his residence or cannot actually occupy it due to the employment or business or profession carried out at any other place other than where he is staying. So to simplify this provision, it is proposed to consider annual value as nil even in the case owner is not able to occupy the house due to any other reason. Carry forward of losses under section 72A and 72AA in case of amalgamation, as I mentioned, will with effect from 1/4/2025 amalgamation or business or the reorganization. The new life of 8 years is now removed, and that will be considered the balanced life, whatever they were having. There were some changes in the tonnage tax, which we are not going ahead with this. And we will take the indirect taxes proposals maybe next week, where we will take the indirect taxes proposal, and there will be another thing which we are going to discuss about the international taxes and transfer pricing changes in the budget. So that's all, friends. Thank you very much.